QuickBooks Pro Plus Desktop 2022 presentation deposit form. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Desktop 2022. Here we are in the QuickBooks sample file, sample rock castle construction, going through the setup process, selecting the view dropdown and the open windows list, open windows on the left side, then the company dropdown, going to the home page, open up the home page in the middle. We're going to be maximizing the home page in the gray area, then going to the reports dropdown, company and financial, taking a look at the balance sheet standard, one of the major financial statement reports. Then we're going to be going to the reports drop-down one more time, company and financial, taking a look at the profit and loss, the P&L, otherwise known as the income statement. Changing the date range, starting from January on to December. We got our three open items on the left-hand side, going to the home page, then back to the home page, toggling over. We're looking at the deposit form this time. Now note, in prior presentations, we focused in on the invoice, then the receive payment. Obviously, the next natural process, according to the arrow here, would be the deposit. Let's close this item on the left-hand side. But note that the deposit is over here in the banking section because it could be used for other purposes other than to complete this one cycle. So we have multiple things that are leading into the deposit. We've got the full cycle. We've been looking at the full accrual process with the invoice, us billing the client for work that had been done, then receiving the payment, decreasing the accounts receivable account, increasing then undeposited funds typically, or putting it directly into the checking account here, but we're assuming we put it into the undeposited funds, and then we group those deposits together and we go to the deposit on the right-hand side. Or we could have a situation, say we're in a business like a restaurant or something, where we're getting money at the point in time that we make the sales, and we're cashing that money into the cash register, and then we go to the bank at the end of the day. In that case, we would get the money at this point in time, same point in time that we do the work, but then we'd still need to take it and put it into undeposited funds and then go to the deposits in order to deposit them. Same kind of process, so that we group the deposits in the same format that they will be seen on the bank statement. This little 2 right here represents that there are deposits that have been included from the process of either receive payments going to undeposited funds or create the sales receipts in undeposited funds, and therefore we can complete those processes by selecting these items and then determining which ones of them we want to deposit together, grouping those deposits in the same format in our records as we hope for them to be appearing on the bank statement, making the reconciliation of our books to the banks as easy as possible, whether we do that reconciliation through bank feeds, where we can kind of match that stuff up automatically, or through a bank reconciliation bank statement at the end of the month and taking and tying them off. Now also, you might have other deposits that are not in this process. So for example, if you're on a completely, not just a cash basis method, but you're on basically a reliant on the bank feeds method, for example, or you're creating your books from the bank statement, then you're going directly to the deposit form. In other words, if you're waiting for something to clear the bank and possibly then waiting for it to clear with the bank feeds before you record it in our books at all, that means that we're a step away from a cash basis, even more so to a reliant on the bank at that point. And when it clears the bank, then we would probably be increasing the checking account and the other side simply going to revenue. And at that point, that's a step away from like a full service accounting system, even on a cash basis, but it could be appropriate for certain businesses. Also note that you might use the deposit form for things that are other than items in the customer cycle, which is probably why they put it over here in the banking section. And that could be deposits for things like loans that you got or something like that, or deposits that you, the owner, put into the business, and therefore you increase the deposit as well. For those kind of deposits, for deposits, in other words, that aren't going through this process of invoicing, receiving payments, or create sales force to the deposits, you might want to enter those in with basically bank feeds. Could be easier. So the other way you can enter a deposit in would be to go to the banking dropdown, use register, and I'm looking at the checking account and say okay on the checking account. You could enter the deposit directly in, for example, like this item. This is a journal entry, but this is a deposit. You know, you got to send deposit. You can put whatever person here, or possibly if it's not applicable to the first line item, if it was a customer. If it was a customer, you probably would be using an invoice or sales receipt. But if you're depositing your own money in or something like that, or if it's a transfer or something, and then you've got the deposit side increasing due to the fact that it being a deposit, and then the other side you can choose the account down here. This is probably the easier way to do it if you're not going through that full cycle of the sales cycle, and or if you have deposits that are going to be like from you or from a bank or something like that for a loan. So closing this one out. Now that 2 represents that there's some kind of grouping from either create sales receipts or the receive payments that are in undeposited funds, and now we're determining how to put them into the bank. So if I select this item, I expect another pop-up window to show up. This is the added pop-up window, which shows those 2 payments that we have. Then now I need to think, well, how am I going to deposit these items? Are these 2 items that I'm going to go to the bank and deposit them at the same point in time? In which case, I would select both of them and then say I'm going to put them in the bank at the same point in time and say, okay, it's going to pop into this window then. And here you can see what happens is it's coming out of the checking account, or it's going into, the checking account. So you could select the checking account that's going to be impacted. You got the date up top, the date that you're going to put it into the checking account, which should be pretty close to the point in time that it clears the bank statement on the bank's side. And then we got the receive from, so you got the information pulling in from either the sales receipt or the receive payment. Undeposited funds, they're both from undeposited funds, meaning the other side that's going to be affected is a decrease to the undeposited funds. That populated automatically due to the fact that we selected it from that little checkbox in order to complete the process of the accounts receivable cycle and or the sales receipt cycle. And then it's going to give us those 2 deposits, and then the total amount is going to be that $2,440. Adding the 2 of them up, this $2,440 is going to be what is on the GL for the checking account, and will also be on what's on the bank reconciliation, because that is the amount we expect to see on the bank statement, on the bank's side. So we do not expect, in other words, the bank to have a $440 deposit and a $2,000 deposit, but rather we expect the bank to show a $2,440 amount, because that's the grouping in which we can imagine we took this money, went to the bank, let's say it's cash, and deposited to the bank in one lump sum. That's the point. That's what you want to be able to do. Now, note that that's also important with the credit cards, for example. If you've got a credit card company and they group the deposits in some way and then put it into your bank, you want to use some kind of process working with the credit card company, working with the bank, and your personal system to see that the credit cards are kind of grouped in a way that you can deposit it or put them into your account in QuickBooks in the same format that they're going to clear the bank, so that you can basically tick and tie and match those items out. Just keep those in mind. Keep that process in mind when you think about your revenue cycle, so that you can do the reconciliation as easy. Now, I'm not going to actually record this. That's going to be basically the deposit. I won't actually record it. I'm going to close it and say, do you want, I'm not going to record. I'm going to say no. I'm going to go back into it again, and let's assume that we don't want to click off those 2. I got some other type of deposit. So I'm not going to click off these 2 because I got some other deposit I want to make. I'm going to close this out, and then I can still use this deposit form and simply choose who it's from and then choose the account for whatever reason I got the deposit for, right? I could choose whatever other account gave us the deposit, possibly a loan payable or something like that, that we would choose down here. And that would be kind of more like a direct journal entry, that being it's going to be decreasing the checking account. The other side would be going, in this case, to the payable account, which would be a liability account. So let's go ahead and close this out, closing this out. So there we have it. Now remember, like when you go for the full accounting process, for the full accounts receivable process, this invoice is increasing the receivable and it's increasing sales. At this point in time, when you receive the payment, you could have told the system to deposit it directly into the checking account, which could be appropriate if the amounts you're receiving are full payments and they're the amounts that are going to be the same amount that will be deposited into the checking account on the bank's side of things, so you can tick and tie them off. Otherwise, this is going to go into undeposited funds, and that's when you're going to deposit it over here with that little number 2, taking it out of undeposited funds, going into the checking account. Let's take a look at it on the financials. So let's open this back up. Let's go to our balance sheet. So clearly this is when it's going to be hitting the checking account. Let's close this back down. If I go into the checking account, then we're going to say that we should have these deposits. Note that the checking account is going to have the most diversity with the types of transactions that are going to be on the left-hand side. So that's just because the checking account cash is like the blood of the company. It's keeping everything flowing. It's moving everything around to the right places. And so there's more activity happening in here. Any other account you look at is going to look a lot less convoluted with the types of transactions that will be involved. The deposits are going to be these items, which clearly will be increasing the checking account. So if we go into a deposit form, takes us to the deposit form. There we have it. Closing this back out. Closing this back out. The other side then is going to be in undeposited funds, typically if we're going through undeposited funds. That means that this undeposited funds should represent money that we have in the form of a check or in cash that we have not yet deposited. This undeposited funds confuses people. That added step could throw people off. So if you have something in undeposited funds and it doesn't represent money that you either have or checks that you have not yet deposited, something's kind of went funny, something went off somewhere, and you got to kind of dig back in there. It's most likely the case where you might have recorded something twice, possibly recording it with regards to undeposited funds and then recording it again when it cleared the checking account. So then you want to go back in and kind of dig through. That's common problem. If I double click on the undeposited funds, you can see it's going up with the payment forms. It would also go up with the sales receipt, but this company doesn't use sales receipts typically because it's a construction company. So it's going up with the payment type of form. So invoice and then the payment, and then it's going down with the deposit. And if you double click on the deposit, there's going to be then the deposit once again. Notice if you had a more complex deposit like this one here, well, it's still only got one deposit item. But over here, it might list out if you had multiple deposits. Let's try to choose one more just to test it out. If we got a deposit here, it's only got one. If they had multiple line items on the deposit, it might show the multiple line items in the undeposited funds, even though on the checking account, it would only show the grouped amount, the one single number. So in any case, that's going to be that. So we're going to go back to the balance sheet. Note that when you make the deposit in this format, there's no impact on the income statement because you hit the income statement when we entered the invoice or the sales receipts. Now we have two balance sheet accounts. We're just moving it in essence from one cash account. This is really a cash account here, even though it's not in the assets section, because in QuickBooks it formats or is used kind of like an other current asset. So they put it down here because it needs to fit into the proper grouping. It doesn't have the same kind of registers and necessary things as the checking account, but it's really kind of a cash account because you're holding on in essence to cash. We're taking it out of one account and we're putting it in and just transferring it over to another account.